Are you ready to turn your dreams of successful stock trading into a reality? Do you believe that with the right strategy, dedication, and knowledge, you can unlock the potential of the stock market? Well, today we embark on an exhilarating journey that will empower you to do just that. Because this is the first episode of the brand new series, How to Start Trading Stocks as a Beginner. In this first episode, we're not merely laying the foundation for a stock trading strategy. We're setting the stage for your financial empowerment. We're asking the pivotal questions that will redefine your approach to trading. So sit back, grab a pen to take notes, and get ready to learn all the real thinking processes behind a great strategy. The first question we pose is, what assets will you choose to trade? It's not just about picking stocks. It's about handpicking opportunities that align with your vision and your aspirations. Whether you're into individual stocks, ETFs, or options, your choice of assets plays a vital role in determining your strategy's success. Consider factors like liquidity volatility and your personal expertise when making this decision, and the more diverse your asset sample is, the more efficient your strategy will be. Your sample size should be made up of 5 to 10 assets, and you can always add or remove some assets later. Your choice at this stage will only be to create a sample that will be used in the strategy construction process. In our case, we've carefully selected 7 assets with high market capitalization, plenty of liquidity, and from different market sectors. These include Apple, Amazon, JP Morgan, Coca-Cola, Tesla, Google, and Johnson & Johnson. And you? Can you envision the assets that will shape your future? Share with us in the comments what assets you will choose. Now, let's jump to the second question. What is the perfect time frame for your ambitions? Is it minutes, hours, or perhaps days? It's not just about trading. It's about crafting your destiny within a chosen time frame. Here, your decision is completely dependent on your trading style or the time you have available. If you have a lot of free time, perhaps you can opt for a trading style more like scalping or day trading. On the other hand, if you are short on time, then a swing trading strategy on a longer time frame will be a better option. In our case, we will base our decision on our portfolio of strategies. For those who have watched our last series carefully, you know that our crypto strategy was created for the 2-hour time frame, while our forex strategy was developed for the daily time frame. And now, to diversify even more this portfolio of trading strategies, we will create this stock trading system for the 30-minute time frame. So think about your trading style and the time you can commit, and based on that, you will be able to choose the best trading time frame for you. If you need help or feedback, feel free to share your questions with us through our free ATP Discord group, where all members will be willing to help and advise you. The link to our free Discord community is in the description. Now, let's explore another question. How will you harness the power of historical data? The secret to developing a strategy that resists the various changes and volatility that occur in the markets over time is to make the process of testing and choosing indicators more difficult. This is done with the creation and establishment of data samples, namely in-sample data and out-of-sample data. In-sample data refers to the data set that is defined and used to develop and optimize a trading strategy, while the out-of-sample data is a separate data set representing a more recent period relative to the in-sample data that is used to evaluate the performance and robustness of the strategy. And here, there's no limit on the data to use. The more you use, the better. For those who are users of TradingView, which is the platform where I like to work, and by the way, through the link in the description, you can get $30 free to use on it. You can find out what the maximum data they have available for you to analyze in the following way. After choosing the time frame and the asset you want to analyze, click on this button that says Go To and enter a very old date. After that, press this blue button and TradingView will show you where your maximum data is. Based on the data available on TradingView, in the 30-minute time frame, we've chosen the years from 2017 to 2020 as our in-sample data because this period includes moments of high and low volatility, as well as the tumultuous period related to the COVID-19 crash in March 2020. For our out-of-sample data, we'll use the years 2021 and 2022. As for 2023, we'll save it for our future robustness tests. Now, here's the last question and the most important one that separates the prosperous from the rest. how do you safeguard your hard-earned capital in this journey? The answer lies in a concept as old as trading itself: risk management. Risk management is more fundamental than the technical strategy itself, and as such, must also be predefined before starting any backtest. There are several ways to establish risk management rules, and just like choosing a time frame, it must match your goals and personality. In our case, we will establish a maximum risk per trade of 2%, and we will use the average true range indicator to establish our stop losses and take profits levels. The ATR is a free technical trading indicator used to measure market volatility, and it is for this reason that it is our best ally for risk management. After a thorough analysis of stock market volatility, we've defined that for the stop losses, the calculation will be made based on the formula 1.5 times the pip value of the ATR, which in this time frame will often coincide with the last swing low for long positions and with the last swing high for short positions. And for the take profits, the calculation will be made based on the formula 1.2 times the pip value of the ATR, thus establishing a risk to reward ratio of 1 to 0.8. But be aware that this will be just our first take profit. As the series progresses, we will share with you highly unique and profitable trading exit concepts, and you'll realize that most of the time we will scale our profits much further. This take profit will just be our first level, where we will protect our positions and close a little profit. After establishing all these conditions, we are ready to enter the most laborious part of the entire process, choosing which indicators will be part of our strategy. For this specific trading strategy for the stock market, we will build and share with all of you a system based on 5 different types of indicators, each with different functions, but designed to complement and strengthen each other. In this episode, we've already discovered one of the indicators, the ATR indicator with the function of a volatility indicator. Each of the other indicators will be discovered in the upcoming episodes. Therefore, I invite you all to subscribe to the channel so you don't miss any episode with this valuable and free information. And by the end of this series, you'll have the tools and knowledge to craft your stock trading strategy, transforming your aspirations into reality. And that's it. Thank you for joining us today. Remember that your path to financial success has just begun, and we're here to guide you every step of the way. Together, we'll unlock the potential of the stock market and elevate your trading game. Hit that like and subscribe button, and let's embark on this remarkable journey to financial freedom. See you on the next episode.